Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
This Saturday is going to be a very interesting one as we bring to you 3 knowledge-packed webinars and 1 direct workshop which we have lined up for you. In a market like this, if you're worried about what's happening to your portfolio, the 10 a.m. webinar is for you. Join us as we speak about how market fluctuations impact your investments, hosted by Harshil and Rham. As an extension, at 11 a.m., we break it down further on how market dips affect your SIPs and what you can do to not let the noise shake your goals. This webinar will be hosted by Harshil and Aishwarya. We have 2 Women's Day specials. At 4 p.m., we have a webinar on how to simplify investing for women using multi-asset investing. If you want to understand a stress-free and holistic approach to investing, please join us for this webinar. It will be hosted by our principal fixed income strategist, Samyuktha. We have another special direct workshop exclusively for women, which will discuss whether the 5K or 10K SIP route is better to reach your first milestone. We hope you can make it to the one that interests you the most. You can register using the link in the description below. The European Central Bank has taken a key step in its monetary policy by cutting interest rates time in this cycle. Here's what you need to know about the decision and its impact on inflation, growth, and markets. The ECB has lowered its key interest rates by 25 basis points, bringing the deposit facility rate to 2.5%, the main refinancing rate to 2.65%, and the marginal lending rate to 2.90% effective March 12, 2025. This decision reflects the ECB's updated inflation outlook, with headline inflation now projected to average 2.3% in 2025, 1.9% in 2026, and 2% in 2027. While underlying inflation remains elevated due to delayed wage and price adjustments, wage growth is moderating and monetary policy is becoming less restrictive, encouraging loan growth. However, economic growth remains weak, with projections revised down to 0.9% in 2025 and 1.2% in 2026, mainly due to lower exports and investment uncertainty. The ECB remains committed to ensuring inflation stabilizes at 2% in the medium term and will take a data-driven meeting-by-meeting approach to future policy decisions. The ECB's asset purchase programs continue to decline and the transmission protection instrument remains available to counter disorderly market conditions. Stay tuned for more insights on how these policy changes impact markets and investments. If you would like to get more such updates on key macro events across the globe and want to understand what impact it may have on your investments or your economic outlook, reach out to us using the contact in the description below and don't forget to follow us on our social media.